This video is a brief overview of job order costing. There are 5 learning objectives for this chapter, as noted on this slide. I will briefly talk about each one. Cost accounting involves the procedures for measuring, recording, and reporting product cost. There are 2 basic types of cost accounting systems, a job order cost system and a process cost system. This chapter covers job order, and the next one will address process costing. Job order costing is used when different products with unique features are produced. Companies accumulate cost by each job. The goal is to determine the cost per job. Process costing is used when a company produces a large volume of similar or identical products. Costs are tracked through manufacturing processes or departments rather than individual jobs. It is important to note that what you are making will dictate which system you will use. The flow of cost, direct materials, direct labor, and manufacturing overhead parallels the physical flow of the materials as they are converted into finished goods. Companies assign manufacturing cost to the work in process inventory. The cost of a completed job is transferred to finished goods inventory, and then when the product is sold, the cost is transferred to cost of goods sold. This is included in the Excel file, and it's your roadmap for this chapter. At a first glance, it might look alarming and possibly confusing, but this is a great resource to assist you with the material in this chapter. First, companies accumulate manufacturing cost in 3 accounts: raw materials inventory, factory labor, and manufacturing overhead. Please note, when you are accumulating cost, you will debit these 3 accounts. Right? You will credit these 3 accounts when you assign manufacturing cost to work in process. Assigning manufacturing cost to work in process results in a debit to work in process inventory and a credit to either raw materials inventory, factory labor, or manufacturing overhead. A job cost sheet records the material, labor, and manufacturing overhead charged to a specific job. It determines both total and unit cost of a completed job. Companies charge the actual cost of direct materials and direct labor to each job. In contrast, manufacturing overhead is an indirect cost. As a result, we cannot assign actual cost, but rather we estimate them using a predetermined overhead rate. The predetermined overhead rate is determined at the beginning of the year. It is computed by dividing the estimated total manufacturing overhead cost for the period by the estimated total activity base. Common activity bases include direct labor cost, direct labor hours, or machine hours. Companies use this rate to assign overhead cost to both work in process inventory and to specific jobs. Manufacturing overhead costs are assigned to jobs and work in process inventory by multiplying the predetermined overhead rate by the actual activity base used. The calculations for manufacturing overhead are also noted on this document. When jobs are completed, companies debit the cost of finished goods inventory and credit work in process inventory. When a job is sold, the entries debit cash or accounts receivable and credit sales revenue for the selling price. It also will debit cost of goods sold and credit finished goods inventory for the cost of the goods. Lastly, under applied manufacturing overhead indicates that the overhead assigned or applied to work in process is less than the actual overhead. Overapplied overhead indicates that the overhead assigned or applied to work in process is greater than the actual overhead, we need to make an adjustment at the end of the accounting period.